HPE shares, they are down sharply this morning. The company issuing lower guidance for the next fiscal year during an analyst meeting yesterday. HPE outlining its strategy to shift business to what it's calling higher growth and higher margin areas with a focus on opportunities in cloud and artificial intelligence. Joining us right now in an exclusive interview is HPE's CEO Antonio Neri, and we're thrilled to have you here. And I said during the commercial break, thanks for coming in, even though it's a complicated morning. Given that the stock is down, and you looked at me as if nothing's complicated. So tell me why.
Well, good morning. Thanks for having me. The security analyst meeting is always to lay the long-term strategy. And when I think about that strategy, it's a compelling investment opportunity. We guided very strongly on our earnings per share and free cash flow. In fact, most of that free cash flow will go back to shareholders.
Right.
And what I think that the street still needs to spend a little time about our 2026 guide, because the 2026 guide was a pro forma guide. What that means that we reset the baseline based on the fact that we only include the 4 months of Juniper in our 2025 results. And so we wanted to be very transparent of the fact that the growth rate will be in that high single digits. But when you look at it at a reported basis, it will be between 17 and 23%.
So when you talk to investors and you see the stock moving the way it is, do you think that's just a misunderstanding of where things are in terms of the explanation of the situation? Or do you think it's that they were expecting a higher growth rate? They don't like the buybacks. I mean, a lot of shareholders do like buybacks typically, but there's always a question about where you're spending your cash, either investing in the business itself, giving it back. Right. How are you thinking?
So we committed to generate above $3.5 billion of free cash flow by 2028. And that's a combination of operating profit expansion, which is going to grow between 11 and 17% over the next 3 years. And obviously paying down the debt on the Juniper transaction. And so as we do that, by the end of fiscal year 27, in 28, you're going to see significant capital returns. And yesterday, we also announced a 10% increase in our dividends. So more than 75% of the cash by 28 will be given back to shareholders. I think the reaction so far this morning is more about the 26 guide, which again, we guided on a pro forma basis. So our revenue, again, I reported, you're going to see is going to grow between 17 and 23%, which is very high, obviously. And we're going to expand our operating profit between 10 and 18%. And so I think the investors need to go through the numbers. And today I'm going to do my runs with investors, and hopefully they will understand.
When you look at that chart, what do you think? I mean, it's sort of an interesting, I'm just looking at it. I know, I'm sure you tell your employees not to look at that chart.
Yeah.
But, here you were down near, what, $12 just, 6 months ago, maybe, at this point. Maybe a little longer than that.
Yeah.
But you look before that, you're now higher than where you were before, but it's been a sort of a little bit of a wild ride.
Yeah. Well, part, Andrew, is because obviously we were delayed on the closing of the Juniper transaction. Right. The Juniper transaction was held back through the filing of the case, and we go through that and we closed the transaction. And so that brought the stock back where it needs to be.
Right.
But remind myself and everybody that, as we go forward, more than 60% of the operating profit is going to come from the networking business. So our strategy is around 3 pillars: networking, cloud, and AI. And this company is going to play a big role in the networking for AI, and then ultimately play in AI.
Speak to that. Everybody wants to say they're in the AI business, but in terms of how it's going to be connected.
Well, if you think about the AI explosion we see today, today has been mostly driven by the model builders and the hyperscalers and this massive amount of CapEx investments. Enterprises are now growing very fast. And interesting enough, the sovereign neo clouds are growing. So our strategy is to compete in the neo clouds and the sovereign space and enterprise. And in the service provider space, we're going to lead with networking, because you need the fabric to really ramp this amount of GPUs. And networking is going to play a big role in that technology stack. And then obviously we have amazing supercomputing and AI at scale that today we already installed all over the world with unique technologies that direct liquid cooling, which is going to play a bigger role.
Hey, Antonio, you are increasing your annual dividend by 10%. You're buying back an additional $3 billion of shares. Is that right?
That's correct. So yesterday,
I guess there would be some questions as to how much you give back to shareholders and how much you invest on these big businesses that you're talking about.
So we increased the authorization to buy shares by $3 billion. So now the authorization from our board is to buy $3.7 billion. We're going to use that authorization over time as we pay down the debt. Over the next 2 years, we're going to pay $4 billion of debt to return to the 2 times EBITDA leverage. We believe that the 2 times EBITDA leverage is the right leverage for the company, considering the expansion of profit we're going to drive. And then from an investment perspective, we have now an amazing portfolio. So we will continue to invest organically in the business through the traditional cycles. And then ultimately, we believe the working capital for AI is obviously one that you have to stay very disciplined about it. And that's why the focus on sovereign enterprise is essential. We're more than 50% of our orders already there. And then in the service providers and the model builders, play the balance between working capital and profitability. And in that business, the margins are very low.
Everybody else is being very careful.
Yeah, but it's, but there are other mechanisms.
Apple. Yeah, Apple. No, but people are, assuming it's going to be the greatest thing ever and just throwing caution to the wind. So you're being very prudent about it.
I am very prudent. Look, I'm in the business to generate cash, not to burn cash. And
that's a good concept.
Yes, that's how I grew up. But ultimately, you need to be in that space in order to drive the scale to participate in the other segments.